Dale should be coming up.
Coach is still out. He's not feeling well.
Oh, really?
Yeah, he's still sick. He's gonna go see the doctor today. He's got a little bit of a flu still.
Well, that flu can knock the stuffing out of you.
Man, I tell you, I haven't had flu in a couple of years.
Same here.
I have to knock on wood, but man, when I've had it, it kicks my butt. I'll tell you.
Yeah. Same thing happened. I'm usually the kind of person that can bounce back pretty quick, but you're right. The last couple of times I've had it, same thing happened to me.
Do you you didn't switch out your microphone, did you?
No, you know, I completely forgot about it until right when you started talking. I was like, uh-oh, I didn't change out my microphone.
Because you have like this intermittent buzz, like every once in a while. Listening
well, I'll make sure. I mean, I've got the thing. It's just sitting right there about 10 feet away from me, so I'll go on and hook it up. But as I told you, I used to use it, and people were like, it doesn't sound so great. I'm like, well, okay. So, but I'll go and start using that again. But I was showing some people, you know, I don't know if you were here at the beginning of the show, but I was pointing out the advantage of ForexAnalytix, and maybe I was back slapping my own self or whatever, but I was pointing out here that you know, one of the things that, you know, like we do the webinar and that's it. Webinar's over. Sorry, folks. But one of the good things about if you're here in ForexAnalytix is you have this analysis throughout the day. And I was pointing out, I don't know if people are aware or how much they talk about, is that you obviously have Elliott wave, harmonics, basic, technical. And I was pointing out to people is that you know, by the time you come into the U.S. session, or if you came into the European session, like, well, God, I didn't know what, you know, maybe that's what you said yesterday, but in the European session, I put here that with the euro about, you know, how it defended the 1541, but I said, until we get to the ECB, play the ranges 1541 and 1635. Well, look when we went to the euro. We went right to 1645, so just 10 pips above that range, and here we are a good 50 plus pips lower. And what I was pointing out to people, when we saw the same thing here, I don't know if you saw the analysis, I posted also for the cable, and I was doing this in the Asian analysis. I think Stelios had updated because I put it accidentally under harmonics, but in the Asian update, I had said I was looking for a move. I said, look, we're looking for an upside challenge to 3083 with a stretch to 3115. And I even posted the chart here for the 2 hour, and lo and behold, look where we go to. There's our 3083, and we take it out by 5 pips, and look at it. The wheels are coming off the caboose on a very short-term basis. My point being is that if you're with ForexAnalytix and the cable's starting to pull down, might have got some headline news. And look, there was our target here, although I thought we could have stretched to 3115. But if you're with ForexAnalytix, you already had this information last in the European session. You'd have been ready. And the advantage is, like I said, you're getting the analysis throughout the day from not only from Blake, Stelios, Grega, Steve, and on top of that, you've got the support here of traders in the chat room. Honestly, like I said, I think it was Steve that told me they're looking for like a one-stop shop, and sure enough, that's what you get in here. You got a great support group with great traders, a lot of great comments, a full-time analysis. You've even got a real-time news feed. I mean, holy smokes, a lot of good traders in there like JT and Martin. I mean, Simon is very, very good. So holy smokes, like I said, I don't know, people don't realize what they may be missing, but this is it's really a great site that y'all put together here. So just a little plug there, a well-deserved plug, is that, wow, you just pick, you like, you know, Elliott wave, boom, you push the button. You like basic technical analysis, wow, you know, what's happening here with the cash dollar index? You come in, you scratch, you know, you're rubbing your eyes and say, well, let me find out, did anybody put any news about the cash dollar, the dollar index? And you click on here, and which I had already posted during the dollar index during the Asian session, and I put it in here, the importance of the 95.32. Well, the market ran out of gas right at 95.29 and turned around, subsequently lost 40 pips. And the analysis was right there, ready for you. You come in, you click on there, tells you that the key thing was, look, for a 2 hour close above 95.32 was going to click the upside. Well, where the heck did we run out of gas? Right there at 95.29.5. But you see right there, there's a 95.32. We run out of gas, we lose 40 pips. So my point being is that you've got all this analysis to come into the day with ForexAnalytix to go in and take an overview, no matter what flavor you like of its candlesticks, analysis, harmonics, LE wave, basic technical, including macro, and then you got the support of the group, and you've got real-time headlines coming across. So I think it's a pretty good value, but I just wanted to go on. I had not even mentioned it throughout, since I said it last week, but as I get more and more comfortable with the website, and updated the chat service here, I don't think people realize what they're missing, or the type of analysis, and more importantly, the support group that you get. When I say support, because trading can be a lonely business, it's great. It's great to be able to bounce some ideas off of other traders' heads. Even the people in the chat room, we've got some very, very good traders. But that's my 2 cents and my little plug for the service.
Well, thank you very much. We worked really hard. As you know, I was with the Wise Trade Group since 2003, excuse me. And after spending so many years with retail traders, I realized, like, okay, these are some of the really key components that traders need, because most retail traders, and I there's a difference between retail and institutional. Retail is like the either the smaller trader that's trading for a living, or a trader that has a quote unquote job that tries to pop in from time to time to to make a few bucks, and then back off. They're back to their normal job, or doing whatever else that they do, and giving them the tools available to quickly be able to see, okay, hey, what's going on? What did I miss? What are some good opportunities? What are some good setups right now? And then being able to plug themselves in at a moment's notice it was important. And that's why having all the different analysis there for you to say, okay, I'm pretty interested in trading the euro dollar today. You can just go quickly over to the euro dollar and say, all right, what's the most recent analysis that's out there, and then on top of it, you've got the active trader chat room. I mean, there are out of the 100 traders that are in there typically throughout the course of the day. I'd say roughly about 100. I would say that probably 30 or 40% of them are part-time traders. The rest of them are like just full-time, whether semi-retired or just trade the markets full-time and make a living there. A lot of traders actually come in and out. They're like, okay, I got to go back to my normal job, but I wanted to check in here, and so it's great. I think it's been a wonderful product for most traders, and I'm glad that you're seeing the benefits of it now, and that's really it speaks a lot to me that it's taken you a couple weeks to go, oh, I really like it, but that's great because you are somebody who's extremely active in the markets, who lives off the markets, and people may go, well, you do a broadcast for ForexAnalytix, but I can guarantee you this, guys and gals. Paulie doesn't get paid a lot of money to broadcast. He lives off the markets on what he makes in the markets. We pay him what we can, but it's definitely not enough to make a living. And I know you've been living off the markets for many years, Paulie. So it speaks volumes to know that you're really enjoying it. So thank you.
I think it's a fantastic service, because I'm saying is like that you're able to get the updates throughout the night, because like I said, if you're a European trader, you're sleeping during the time of Asia. But look, this analysis was posted in Asia. So if you, like you said, you woke up in the morning and said, let me see, what did they post here with the euro dollar? And obviously this is showing this was well before that. We've already been on the show for over an hour. But when it was last posted, this was during the Asian session. And here's the 1635, and there's the 1635 there for the euro. well before European trading. And it wasn't just this one, it was the same thing with the cable. When, same thing, the analysis, we're looking for a move up to 1583 with a stretch here, with a stretch to, right here it is, 3083, with a move to 3083, and lo and behold, the cable runs out of gas at 3085. My point being is the advantage of this is that even if it's not in your time zone, you're getting updates and analysis throughout the trading session. So you wake up and you're like, well, I'm a U.S. trader. What happened? You go right here and you just click on the thing. Oh, I like, is there anything new on harmonics or whatever? You click on there, you get the analysis throughout the day, and you can pop right into the chat room. And like I said, it really is like, I think it was Stelius or Steve was, they said they were really trying to provide a one-stop shop. And boy, I tell you what, it looks like y'all really have it here on this with this program.
Well, thank you very much, Paul. Now, I want to. I'm going to take over just because Steve's going to be coming in just a little bit, but I want to. I got a few things I need to cover. But Paul, I want to say thanks for being here this morning. I know people love your analysis in the morning. I try to listen into most of it. I have it, piped in my ear most of the time as you're speaking. And great call on the dollar index overnight, by the way. If you guys didn't see like his analysis for the dollar index in Asian trade, where is it? I might have just skipped right over it. I can do it this way too, but on the dollar index on September 10th, this minor slide, still support, leaves bulls in control. 2-hour close above 95.32 sets up the market for upside challenge. A 2-hour close below 95.09 places bulls on the back foot. Upside challenge would likely come during New York session when bulls had lower, and it played out just like that. So
yeah, they're I guess at 95.32. Well, not to interrupt, but I was going to say is one of the things we mentioned before we left and said if we get back above 95.32, don't get in the way of this thing because we may just keep on pushing hard. I don't think we're going to put a brand new leg, but we could get a good little squeeze pop in the dollar. So just be careful. I'm not a believer of the dollar for a brand new leg, but golly, don't get in the way of this thing. And I'll bug out from here.
Awesome, Paul. All right, we'll talk to you soon, bud. All right, guys and gals, this is Blake Morrow. You're listening to the Face Webinar. Dale Pinkert is out again today. He is fighting the flu, so he is going to the doctor today. He's heading to the doctor today, and he's just not doing well. So hopefully, let's wish him well when you speak to him. And next time you see him, if you see him on Twitter, make sure you wish him well because he is, flu is no joke. I'll tell you, the body aches and it's rough. Anyway, and for Dale, it was way too much vacationing. I think those 2 weeks off really hit him hard. Just kidding. I know he's not listening in. But hey, as far as I wanted to bring the cable to your attention because the pound, there was just a headline that came out that they're saying, sources in Brussels are complaining that the Britain's overspinning and saying the UK officials are misreading upbeat statements from Brussels, Paris, and Berlin. The cable has slumped since then, and the scary thing about the pound, I want to say this is the pound was ripping overnight above 130.50, and then it reversed hard following the jobs numbers. And if you look at the employment numbers weren't bad. I mean, the average hourly earnings were stronger. The claimant count change, or the unemployment claims is the way us North Americans will look at it. It came in a little worse than expected. Unemployment rate came in line, but the cable actually slumped following the data. And the pound's been kind of under pressure. Now, the thing I worry about most technically with the cable is that we broke this, trend line, and it looked like it was going to surge. And this is in European trade. I was asleep. It was going to surge higher, and then it reversed. Now, am I bearish the cable? No. But am I worried that it could turn lower? Yeah, I'm a little concerned that it might. It might from here, and we might see, whoa, it just spiked. Oh my God, it just spiked higher. What the hell? I was just, look at the pound. What just happened here?
I'm trying to find what's happened, but I don't know.
Irish Prime Minister says Brexit deal may be within weeks.
Oh, there you go.
That would be it, you know. So let's see here. Wow, that would have done it. Just when I was saying, man, you got to be careful with the cable. All of a sudden, it's just pushing higher right now. So, and you know, that's when you're talking about the Irish Prime Minister. That's a pretty big deal, right? Because the border is the big issue.
Yeah,
Stelios.
That's right. That's absolutely right. That's really the main stumbling block. Everything else can be, you know, finding a compromise and everything else is easier, but that's a big one. So if the Irish Prime Minister is saying this, then it's getting more and more constructive. We've said this many times. So, and you know, also we had the announcement. I wasn't aware of it because I was away. I was out all morning. But our friends in chat room, Amanda, they told me that Carney apparently is going to be on until early 2020.
Yeah, that's. I don't know if that's a good thing.
It's not a good thing. I don't think the market likes that. No, but still.
But it's correct. I mean, I saw that headline come a little bit earlier too. And I'm sorry, I picked up a little cable right down here, just scalping it on the long side, because I do believe that's a big deal. You mean, you get the Irish Prime Minister says, hey, you know, we could have a Brexit deal done within weeks. You know, that should be bullish the cable, at least near term, because I missed the original headline because I was sitting here talking instead of looking at the news as it was being released. But anyway, let me go over to a 1 minute chart here just to see. You can see the pounds coming back down just a little bit. Overall, though, I think this is a.
Yeah. You know, you also mentioned the average earnings index that came out today. To me, that's a really big deal because it came in at 2.6%, expected 2.4% year on year, and now it's actually higher than the actual inflation rate. So there's no longer a squeeze on the on the consumer, and you know, it's only 0.1, 0.2 here and there, but really this is something that the Bank of England always looks at, you know, the gap between inflation, CPI, and average earnings index. So as long as that's positive and they're both above 2%, well above 2%, you know, the Bank of England has nothing to worry about at the moment. The only worry, as we've said before, is Brexit, and look what's happening to that.
Right. Well, you know, and I guess the question is, will they, you know, put together a deal? And you know that whenever you hear sources say, you know, you always got to be a little skeptical on what sources are saying and why they're saying it, you know, because that comment that the sources in Brussels are complaining about British overspend, but you know, at the same time, you know, it seems like there's some pretty positive developments that are happening with you know, the potential of Brexit negotiations. Now, and I think, you know, as far as the cable goes, and like I said, I picked up a little bit down here. I'm probably going to spin back out of it here. I bought it like right where it's at. I don't know if I really want to stick around in it. I think while it's below today's highs, you got to be a little concerned because I'm technically concerned about the false breakout that we're seeing here. That's the one thing that I'm a little concerned with at the moment. But the euro is confined in this wedge. You can see this wedge is holding up pretty well, and we had a false break below the wedge yesterday. We talked about it coming back up to the upper end of the wedge. Well, it came up to the upper end of the wedge, made a false breakout overnight, and we've come back down, but we're mid-range. I mean, you know, when you're in in the apex of a wedge, and let me draw this out for you guys. When you're in this apex, right? We're literally in the apex of the wedge. There's massive amounts of volatility, and you got to be really careful when you're trading around here. Eventually, you're going to see the breakout higher, or you're going to see the breakout lower. And currently, right now, we're just kind of dealing with this move right in the middle, which is extremely volatile, and it's just, you know, it's taking no prisoners, and so I believe that, you know, you do have to be a little careful here as far as the okay, look at the pound, just slipped right back below 130. Unbelievable. This thing's got, yeah, just a mess. Look at that. Pushed right back below 130 after going up to 130.40. Unreal. I'm going to sit in a little bit of it right now. I'm more bearish the dollar at this moment than bullish the cable. So I'm, I'll sit in it for a little while and just kind of, maintain a position in it. But let's talk about some of these other pairs, like the Aussie. I did pick up the Aussie overnight, and I do own the Aussie, a few pips away from where we're currently at. And I want to show you why I'm buying it. First of all, if you take this move, and it is counter trend, so just keep in mind that this is very much a counter trend position at the moment. We have 161% extension of this move in December. So the December-January move, 161% extension comes in at 70.88, which, by the way, the low today was 70.87. I bought it in Asian trade last night at 71.10 or 71.11, excuse me, because I thought if it spikes down there, I'm not sure if I'm going to be able to get it while I'm in Asian trade. I just said, well, I'm just going to pick up a small position in the meantime. But we have a big confluence there, and then another 161% extension of this most recent move in August, from low to high, 161% extension here as well. So we have a lot of confluence right at this support. So I'm basically just picking up a counter trend move, but we have to get above 71.40 in order for me to be more bullish. Like I want to be bullish, I want to be more aggressive, but I can't be more aggressive until we start to see the dollar sell off a little bit. Now, one of the risks of the dollar at the moment, in my opinion, is that we have some, the markets are feeling a little risk off. So as the markets feel a little risk off, or we're seeing a little bit of selling pressure in the equity markets, the dollar is the beneficiary at the moment. But you guys know as well as I do, the stock market, I know it's Tuesday and we could have turnaround Tuesday. However, the stock markets are very well bid, and just when you think that they're going to start selling off, they tend to reverse and come up in your face. So, I think the risk of the Aussie here at this major 161% fib confluence, you can say it's channel support, all comes in around these levels, I think is pretty key. And we'll see if we can hold the support here. But we have to get above 71.40 in order for it to really turn bullish at this point. Kiwi dollar made new trend lows. 127% extension should come into play at 90 or 64, 93, 95. That's where we should see some support in the Kiwi, but it continues to drift lower as well. The dollar Canadian, we're waiting on some potential NAFTA news today. It's just kind of sideways. We have to get below 131 to be really bearish, and we got to get above 132 in order for us to turn bullish here. And I think this is all NAFTA related, so we're not going to see much. There's some housing data coming out, but that shouldn't do anything for the Canadian today. Swissy, the Swissy had recovered. Looks like it's rolling back over again. I think the Swissy is at risk of as long as we're below this 97, 80 level, it should still stay pressured. I think a lot of this is Swiss National Bank related. I think we're seeing a lot of the squeeze, like in the Euro Swiss, for example. This smells of Swiss National Bank. This move yesterday, you can see up here. So and the Swissy just kind of it benefited from that. But if the dollar sells off and we see the euro back above 116, then the dollar Swiss will probably slip back down here. And last but not least, I'll go over before Steve comes in is the US dollar Japanese yen. It is extremely choppy. I have really zero reasons to be trading the US dollar Japanese yen yet. I mean, we do have, again, a little bit of risk aversion that's come in, so that's taken the dollar yen from the 111.55 level down to 111.30. But I mean, if the S&P sells off 1%, You know, what does that do? Take the dollar yen down to 110.50? You know, the dollar yen has been very much a mixed bag, and I'm not excited about it. I wish I know I say this pretty much every day, and I have for the last, you know, week and a half. I really have no idea how to trade the dollar yen, so therefore I'm not trading it. I think I traded it last week for a little bit. I think when we were up here towards resistance, I was looking at this as, you know, pretty key resistance, not necessarily a double top, but pretty key resistance. I traded on the short side last week and made a little bit of money through here, but I haven't traded it since I captured some of this downside, just a little bit of its downside. I haven't traded it much since then, because I just don't trust it, frankly. I don't. And gold and silver are still pressured, but you know, silver I'm looking for. I picked up gold yesterday actually, and I'm looking for silver above 1430 before on spot price before I really get more bullish the precious metals. I really want to see silver firm up, and the Nordic currencies are just kind of sitting around, not really doing a whole lot today. And that's pretty much it for the majors. I'm going to leave the crosses for Steve and Stelios. And Steve, I'm not sure if he's feeling better today. So Steve, are you in?
Hey, mate.
Hey, are you feeling a little better today? I know yesterday you were a little under the weather.
My throat is, you know, a little bit. I think it's a little bit worse, but other than that, I feel better. I mean, you know, I have more energy, so I guess that's a good thing.
Oh yeah, that is a good thing. Yeah, thank God.
Yesterday I was feeling like a bus had ran over me.
Oh my gosh. Well, you know, it's tough when you're dealing with a child, a young one that's sick as well, and I've had my fair share of those. How's your son doing?
He's much better. He has made an amazingly fast recovery. I mean, unexpectedly fast. So we're good on that front.
Great. That's great to hear. All right, Steve. Well, like I said, I'm not, you know, I was looking at the euro dollar and I was, you know, trying to explain to everybody that we're really in a wedge here, and it's, you know, as the wedge builds this apex, you know, as these two lines converge to one another, the volatility is heightened. And that's exactly what we're seeing today. It's like an increased volatility inside of this wedge. And I think, you know, if we punch, you know, on a sustained basis outside of this wedge, it's gonna speak volumes for the FX market. But while we're just sitting here, you know, you have to be a little careful as far as you know, getting too aggressive, bullish or bearish the dollar while we're trading inside of this wedge.
I think, Blake, that not coincidentally, I see the same kind of conundrum here with the euro and the US 10-year yields. Both of them are looking like they potentially can be forming like a head and shoulders formation, but at the same time, you know, the more we don't break lower, the more asymmetrical that becomes, the higher the chance that it's just a triangle that wants to resume higher. So the first thing I actually wanted to show, I don't know if you want me to take the screen.
Yeah, I'll go ahead and flip it over to you.
Okay. Okay, let's see. Okay, can you see my screen?
I can.
Okay, so the first thing I'm monitoring here is the you know, the 10-year, the ZN. As you see, the more we fail to break higher, initially I thought that, you know, this would be like something like an ABC, like we're going to move higher. We pulled back, we're going to move higher once again, perhaps towards 122. But now we've spent a considerable amount of time consolidating in what looks to be like a triangle. And we're currently testing support. And obviously, it makes sense that if we have a look at the yields, it's the exact opposite thing happening here. So, you know, initially this looked like it could be a head and shoulders formation that would end up breaking lower, and we would get like some pullback in yields and get everybody trapped the wrong way after forming this huge inverted head and shoulders formation in yields. But now this looks more like a triangle that wants to break higher. And in my opinion, if we do break above this trend line resistance, there is a good chance that we're going to see some decent follow through. I don't know what you think about that.
Yeah, I mean, and it's one of the things that could really, impact the markets negatively is if we see yields start to scream higher again, because that's one thing that the markets have seen as a negative is higher yields in the 10-year. So I mean, we're pushing some pretty key resistance. I mean, I'm looking at yields right now, and the 30-year yields actually starting to move lower. That means that the bonds are bouncing just a little bit on the 30-year. So maybe the long end of the curve starts to drag the rest of the bond market higher, as yields come down. But I think that is a risk for sure.
And Steve and Blake, also, if you look, I look at the long-term chart for treasuries. If you look at the monthly chart, we're in a 30-year channel, and we're just trying to push higher out of it. So it's a scary chart. If you look at that, it's like a 30-year channel, which has been tested 4 or 5 times on the high side, 4 or 5 times on the low side, and now we're just about to break out. So if that happens, oh my God. So I think we've lost Steve actually, and he's going to the to his other PC.
Yes, I'm here. I'm here.
Okay.
I'm not on my other PC, but obviously the problem, despite opening those ports. Yeah.
So were you speaking and we couldn't hear you? Because
yeah.
Okay,
yeah.
you were sounding perfect until Blake was speaking, and then.
Yeah,
okay,
and actually, what I'm going to do is I'm going to sign off, and maybe that frees you up again. So.
No, we found out with Citrix that some ports that had to be open were closed, so we started opening them with my provider, but we just got like a lag again. Well, I can continue. I have my computer connected to a 4G, the other computer next to me, so if I lag again, I will jump, directly on it using another router, so I will be okay. So what I was saying is that I think that this is a very, very important development for the market. I mean, what we're seeing here, the potential breakout in the yields, I think that can get the market moving. Now, having to do with that, having to do with the potential to affect risk, yeah, absolutely. I mean, I see a little short-term consolidation here. Let's take the S&P, which is obviously considered the barometer for risk. There's no question about it. So we have like a short-term consolidation here. We seem to be testing this ascending trend line support. It's an internal trend line because, I'm actually giving more, I consider the channel more important. So, we're currently testing that. But I think that the index that is actually, in danger, in a much higher danger of breaking down is the NASDAQ. Because the NASDAQ, I don't know if this is some kind of a false move, but so far it has broken below this ascending wedge support. It has been consolidating for 3 consecutive days, like we see very small candles, one spinning top, another spinning top. Today it's like a little shooting star. So, this looks like a consolidation that might resume to the downside. So we might break higher and continue from there. But one thing is for sure, this ascending trend line support has proven to be important so far. Why? Because the market respected it so many times. So even if this isn't, let's say, an ascending wedge, even if we isolate the trend line support, only, I still think that the market can, if we break below this 50 DMA, can
Yes, we seem to have lost Steve. So I think he's going to switch to his other PC. Right. So let me take over until he's back. Who's this? Hey, how you doing, man? Hi.
I'm fine, thank you.
I didn't realize you were going to be here. How's it going?
Yes, I was just signing in a little bit earlier. So, how are you?
Okay. I'm very well. How are you, my friend?
I'm fine. I'm just listening to discussion about 10-year US yields and dollar yen and markets in general. So I will have to agree about the potential impact that it may have on the markets once we see the breakout on the 10-year US notes, and somehow I still think that this can be resuming to the upside. I just love that head and shoulders pattern that Steve highlighted it on the yields. I'm also actually looking for the bullish head and shoulders pattern on TLT, which, as you know, it obviously ETF that tracks the 10-year US notes. So I still think that there is a chance that actually 10-year US notes.
Why don't you share your screen? I want to see it, Gregor.
Hey, Steve. So you're here.
Yeah. Just I had my other computer immediately ready to connect because I'm still trying to troubleshoot whatever the problem is. So I'm on my other computer on a 4G router, so I'll be fine. But go ahead and grab the screen. Show us.
I think that you should, or someone who is organizing.
Let me pass it. Let me pass it.
Yes, exactly.
Let me see. Attendees, stuff. There you go. Is it okay now? Did you get it?
Yeah, just a second.
I can see it.
Yeah, me too.
So that's the 10-year US note, or if we firstly should maybe look at this chart, we have still only 3 waves of decline, so I'm just expecting a reversal to the upside. And what I think that we may see in the near future, or let's say in October, is maybe still at least wave C to the upside after this rally that we have seen in May.
Greg,
okay, so, yes.
I was just showing that. What makes you think that this is not another textbook bearish consolidation? And I'm saying bearish because we came in this consolidation from the upside, so we entered this consolidation, and so far this looks like a quite clean triangle to me. So,
yes, and even I was considering a triangle as soon as you mentioned it. But even if it's a triangle, right, we still need 5 subwaves.
Yes, no disagreement there.
Yes, and here we have, in such case, only wave A, then you have wave B, then you have wave C, and now you're in a wave D. And even in such case, this range should not be broken yet, because you will have to see wave E, and then you will see a decision made a little bit later, either for a break to the upside or to the downside. So I still think that there is either we will continue just sideways, or we will see a push to the upside. But the reason why I'm looking for potential rise here is because here we had a clear 5 waves of decline, and this was a very strong bullish reaction. Okay, so why I'm thinking that we still should see at least 3rd leg to the upside, and we are trading quite choppy here, so I'll not be surprised to see this as maybe as a wave B, maybe even wave 2, but I don't want to be too aggressive on the bullish side. And clearly what I expect is at least wave C to the upside. Also, here's this TLT at the top, okay? And you highlighted it very well, potential bearish head and shoulders on yields. So I think that this is still a very valid pattern, and but obviously we have to see a broken neckline before this pattern can be confirmed. But if this really would come in play in the next few weeks, then I really think that upside should be seen on
I'm guessing, though, having to do with correlations, we obviously agree on the fact that most probably if something like that happens, I mean, if yields actually play out to the downside, that most probably will be an indication that we're also getting some risk off along with that, right?
Yes, and if we take a look on dollar yen, okay, we have some very clear path here. This was a decline. Maybe some would label this as a corrective decline, but if you look closely, you will see that this is actually a movement in 5 waves. It's a wedge called a leading diagonal. So what I'm thinking is that this is wave A, only first leg of a 3-wave drop that is unfolding for a lower prices for a wave E. So if we go to the daily time frame, you can actually see that this wave D high that was posted in July, in the middle of summer, came off from this trend line resistance. So somehow, based on this simple logic and range-bound market, we are still in consolidation. So if we reverse from the upper side of the range of this from this trend line with 5 subwaves as a leading diagonal, then I think it makes sense to respect what market has been doing in the past, and maybe we are now moving to the lower side of this range, which means towards this trend line. And if we respect also the Elliott wave cycles and wave E, well, wave E should be made by 3 waves. Okay, so I'm thinking that this wave E still has a chance to reach lower prices. However, nothing goes just straight to the downside. So I think that the current lag that we are seeing, okay, is representing wave C of this temporary corrective rise. Notice that this first leg was clearly in 5 waves. Then we have reversed lower ahead of non-farm payrolls report and bounced higher, which I think is now wave C. So I mean,
that if you draw the parallel of those 2 peaks that you have in B, and then the last 2 peaks that you have, you can see that more or less, it looks like it wants to break higher. I mean, on a chart, it looks like I think that if we do break above 111.50, there is going to be some follow through. So I agree with what you're showing there. I think that if we actually make it a little bit higher than where we currently are, I think that we're going to push somewhat. Now, if we're going to end up pulling back afterwards for a wave E, I'm not so sure about it. It's very likely. To be honest, I've really got to hate USD yen. I haven't lost any money on it because I was wise enough to stay away from it since it's so choppy and, in my opinion, almost untradeable. But definitely it looks like if it has to do something in the very short term, it looks like it might punch through, right?
Yes, but also once we get towards 112, okay, that's maybe will be important timing to look on the other side again. Okay, and that's when the 10-year US note may finally show us some support. So with that being said, I also, with those correlations and with those wave structures that I see on both markets, I also try to look something useful on the euro dollar. And on the euro dollar, what I see is still room for more upside, which means, again, weaker dollar. So when this market, dollar yen, will complete this 3-wave rise, that's when I think that euro dollar may also turn to the upside. Okay, so if we take a look on euro dollar, where I believe we have even clearer, even stronger pattern, which suggests the same, because this rise from the lows, as you can see, was clearly in 5 waves. Okay, and now we are tracking only a corrective pullback. There was a chance that maybe a correction was already completed yesterday at these lows, but I would not be surprised actually to see this market reversing those gains, because it was a move on Monday. Normally I don't trust Mondays, especially if you see any strong flows. They are usually very quickly reversed. So what I'm looking at is that we are now in a pullback, and maybe ECB will be a trigger for a real bounce that may occur later this week. So what I'm looking at here is also a 3-wave contraband movement to the downside towards 61.8%, from where I would be expecting a bounce. And that's also timing when maybe we will see some top coming in place on dollar yen, because clearly this euro dollar have a very strong bullish pattern. Even if I would not respect the correlations, I would still mark this as a very bullish pattern for the short term. So, but now if I also consider the correlation and the structure on dollar yen, potential head and shoulders there on TLT, well, I think that this everything makes, at least technically speaking, makes sense to me. So what I'm looking at is still, I'm actually on the, as I said, for the short term, I'm expecting more dollar weakness.
Okay. What about the metals? I mean, they show
metals,
some.
They go in line with the euro dollar. Okay, very nice actually. So here, if I switch back, I also covered this quite in detail in our week ahead video 2 weeks back. So back then I talked about this upcoming bounce. Okay, I said that we are tracking wave E. Now this is wave E, but since each leg within this triangle was quite extended, I would not be surprised maybe if wave E would be much smaller and maybe more complex. But nonetheless, I still expect that we will see higher prices for wave E, or within this pullback, I should say. And I'm expecting actually market to retest this old swing low, because we have turned here from the lows in 5 waves. And what is probably at this stage the most important, I will remove this. The most important is that this decline, okay, is very overlapping. You can see this
clearly corrective. Now I don't know if it's an ABC or a double zigzag or whatever, but that's why I've started actually accumulating a long position. One more thing that has made me look higher prices for gold is the fact that we see some very clear divergence between gold and silver, and that's usually another good sign that you might be seeing like a market turn. So, you know, the fact that silver has actually pushed to new lows and gold hasn't followed, it's also something that I like.
So something must be happening then, right? So yes, I absolutely agree. And what is interesting about silver, you can see here, by the way, a correlation between euro-dollar and gold.
And gold,
so,
yeah.
Since euro-dollar in blue, you can see was very strongly to the upside, okay? So if we see gold also finding a support now for this wave B, then we can expect that euro-dollar will move even more sharply to the upside, right? So regarding silver, what is very interesting here, that we are, okay, falling here in a 5th wave, making 5 subwaves within this leg. So what this means? It means that we may expect a corrective recovery in minimum 3 waves. But even more interesting and important, especially for Elliott wave traders, because they understand and know the theory, is that current decline is coming out of this triangle. And triangle
should be a final thrust. Yeah,
exactly. It occurs ahead of the final piece of this decline that is coming down from $15. So I'm
probably capitulation, probably a capitulation move. I mean, you know, for the bulls to actually give up.
Yes, but again, we may see only a temporary recovery. But what I'm trying to say is that even if silver, as you said, is diverging, it's very low, gold is not so weak, but still it's coming to the downside, but maybe only into wave B, while silver is going to make a 5th wave, okay? But if we consider also the euro-dollar, also in a corrective pullback against previous 5-wave rise, so gold, if we respect what gold and euro-dollar are doing, that sooner or later maybe they will find a base. That means that silver may also turn higher. And if we consider that we have a break coming down from a triangle, I'm even more confident in that view.
Okay, perfect.
Okay.
What about
what I want to discuss about my potential new trade is probably dollar CAD. Okay, I have so I want to look at the dollar CAD. I have this one on my radar screen for some time. So if we look at this price action, and what I like about it is that we have seen a move to the downside, a pullback in 7 swings. Okay. More importantly, the rise from this August 28 lows came very strongly, clearly in impulsive fashion. So we should see more upside, even if this is going to be only a 3-wave recovery, like an ABC, and we are still will remain in consolidation away from June highs. I think there is a chance for to catch some upside here, because we are now tracking a pullback, and ideally we will see a pullback back into this trend line. Okay, so I like this one because of crude oil. Okay, crude oil came very nicely to the downside, Let me look at this 4-hour chart. Okay, so actually I'm tracking a potential flat formation here, and notice that we have seen quite aggressive decline here, probably in impulsive fashion. Which means,
after an aggressive move to the upside.
Yes, so it was a failure breakout there. So at least, again, 3 wave decline should follow. Okay, maybe an impulsive one, which means we will again attack 63. But I will always repeat this. I always try to focus on minimum expectations, because this allows me to build a solid risk-reward trade. Okay, but anything more than ABC structure will be just even better for my potential trade. So what I'm looking at here is that I'm expecting even more weakness. After a bounce here, I see nice resistance around 69. It was also this old swing high as well. Okay, but again, I have also bullish count here, which suggests that we are now only a temporary pullback, but still, in such case, you should see a 3-wave decline. So once we see a weakening prices on crude oil for wave C, that's when dollar CAD may continue even higher. Okay, so I really like dollar CAD. I like dollar CAD because of the price action on dollar CAD itself, and also even more because of what the crude oil is doing, is turning down quite impulsively. And I have also here this intraday chart. You can see potential 5-wave decline, and now we can be in a 3-wave pullback. So resistance, first one is around $69 per barrel, second one is 50 cents higher, which is also near 61.8%. Okay, so dollar CAD is definitely probably one of the most interesting pairs at the moment. And here are these levels that I'm looking on the short term. So you can see here 5-wave rise. This was wave 1, 2, an extended wave 3, then wave 5, and you can see this example right here on dollar CAD. You can see that this move, I remember this very well because I was tracking it very closely last week. We identified a triangle here for wave 4, and I knew, not that I knew, I just assumed based on statistics or experience, whatever, that move to the upside should be a final. Okay, so this, why I highlighted this is because of the silver that I said that we are probably going to see final thrust to the downside out of the triangle, then reversing. Same thing was here on the dollar CAD hourly chart. 5th wave up, now we are reversing, ideally making a 3-wave deeper pullback. So watch out for the support levels that I'm looking are 1.3020 up to 1.3090. So it's what, 60 to 70 pip zone. So if someone is trading this, maybe 2 entries deal, and this is what I'm considering actually.
I'm 100% with you. I have the exact same chart on my USD CAD. I would ideally also want to see a move down to 131 roughly. And yeah, it looks like it has more upside. Now, what do you think about cable? Cable is once again today getting rejected from that major zone. It's also descending trend line resistance at 130. I don't know, my gut feeling keeps telling me that it's going to punch through and make it to at least 133. But from an Elliott wave perspective, what do you see here?
Just a second. Actually, as I said already earlier, I normally do not trust any strong, significant, sharp moves that occur on Monday. Okay, so this was actually a Monday move.
Mm-hmm.
So I was posting this chart yesterday, and I highlighted a very important resistance here for wave C, because I was considering that euro dollar to the downside is still in a pullback, which means that deep correction that I showed you earlier is not done yet. So I said to myself that probably dollar index is also having room for more upside. So I assume that cable is still not ready to attack the bulls just yet. So I was looking for potential flat formation, which means in the flat formations you see typically a 3-wave structure that moves to a new extreme, which means above the starting point of this wave A. So I was tracking this resistance around 1.380, which held perfectly today. So if we see even lower prices now for the next few hours, and then maybe a daily close beneath this trendline support, then this flat formation would definitely make sense. So in such case, as you can see here, I would be looking for another drop here for a wave C, maybe to retest these wave A levels and then turn to the upside. But the key is that this is just a pause within still ongoing recovery that is underway from August. So what I'm looking at on the daily chart actually, and why I'm expecting is deeper recovery to be seen, is because if we take a look closely, we have seen a broken trend line right there in the last 2 weeks or so. Okay, so I'm thinking that this leg is completed. If this leg is completed, we are now in a first or in an important phase of a recovery of a higher degree. So I took and looked back and compared the previous cycles, each pullbacks or lags, if you want, that cable made. And you can see that there was always a pullback from around 600 to 700 pips move. Okay, so if we are now in some kind of a higher degree correction, I think that maybe we are another 600 to 700 pip cycle. So I'm expecting higher prices. Also, there were some choppy price action right there. So clearly, these previous swing highs are definitely important. So that's why I'm looking for more upside here. And if we consider what the 4-hour chart, as you said, is doing, then maybe it makes sense to see this current move from here, okay, to here as a temporary, still ongoing correction. And on euro dollar, if we, like we said, we see room for another leg to the downside, wave C. That makes sense then with cable. And also, if we show the dollar index, what I'm looking at here is 5-wave decline, now 3-wave rise underway. So still, I will stick with that 61.8% target, which is a 96, and then we'll try to turn bearish. And I think based on timing and based on maybe ECB event that is coming, maybe we'll see just kind of a failure push to the downside on euro dollar towards 1.450, and that's when we may start considering maybe a real bounce that can be coming.
And now for the multi-trillion-dollar question. Stocks have been pulling back somewhat last week. The vast majority of them don't seem to be technically in trouble, with the exception perhaps of the Nasdaq. I mean, I do see an ascending wedge in the Nasdaq, and I do see the Nasdaq trying to probe below it today. Also, the DAX approaching the 11,800 level, which is like the neckline of a huge head and shoulders formation, clearly visible on the weekly chart. So, what do you think? Are we going to do it or not?
I mean, stocks are really, they are not correlated at all. I was looking at the S&P 500 this morning, and I was discussing with my friend, and we both agreed that move down from August highs, okay, is looking very slow, probably corrective. Okay, so if I look at this, so this is the structure that I was looking at. Okay, you will have very difficult times to count this in 5 waves. But then you look at Nasdaq 100 and you see a very sharp decline. Okay, so if I pull in Nasdaq, you can see a very strong turn. So with that being said, I think,
and not only that, in the short term, if you look at the structure there in the 30-minute chart, this looks like a bearish consolidation, right?
Yes, exactly. Clearly, I would be expecting more downside, but maybe we see this as a, if I label this real quick, 1, 2, then you have 1, 2, 3, 4, 3, 4, 5, and now we are maybe in ABC rise, okay? And then we see a move to the downside. So, as I said, I really don't have a very strong opinion here on stock markets because, as I said, they are not in any strong correlations. Also, if we understand that S&P 500 and Nasdaq are not in strong correlation, then we look at DAX, which is far away from its high, then really something is not right here. So being on the bullish side of stocks is really dangerous, probably.
I guess you agree that 11,800 is like super critical level for DAX, right?
Yes.
I mean, this is one of the cleanest head and shoulders formation I've seen. I mean, this is going to be a huge top if we clear below 11,800. You know, in my opinion, if we do clear 11,800 and that doesn't immediately snap back just to get people trapped, so if there isn't like an immediate response to breaking below that level, which we've seen happen in the past multiple times, and I'm sure we're going to see in the future again, that's going to clearly tell me that people that are still long, once we spend a day like below that level, are going to be really scared. I mean, I wouldn't be holding my DAX longs if we actually, decisively made it below that area. I mean, I would be like, okay, time to bail out. That's it.
Yes. So actually, as you said, it's important level, right? So unless the important level is broken, there's still chance to see a bounce, right? So actually, I'm observing this Fibonacci equality levels, okay, that maybe can limit downside here, at least temporary. So I'm looking at that an ABC, XABC pattern. And also, actually, this is a complex correction still structured by some kind of a three legs, okay? So this is one leg, okay? And then you have wave X, and then you have another leg, okay? So if you have first zigzag, wave X that connects the second zigzag. And if you respect, sometimes in double zigzags, second zigzag will be similar in length compared to the first zigzag. So this is blue Fibonacci, as you can see here, which comes in around 11,770. And then, as you know yourself, sometimes wave C is equal to wave A in a single zigzag, okay? And this is the red Fibonacci. You can see wave C.
Yeah, so we have a little zone there of interest as
exactly.
possible.
So, yeah. Why this matters to me is because both Fibonacci's are in very similar levels here. And not only that, we have here on the 4-hour chart, maybe I should adjust this one real quick, okay? What I see is that we have 5-wave drop here with the 5th wave already in progress down from end of August, okay? So, which means this 5-wave decline is representing wave C of this structure. So even if we respect only this 1-hour chart, we still have only 5 waves down, which means at least pullback in 3 waves may follow. So again, it's still early start of the week, okay? Flows will probably change later this week because of the ECB, and maybe we get a bounce, okay? But as I said, at least in 3 waves. So I think we really should respect this price action and potential reversal even from that.
Yeah, we should also consider that if we get like a bounce due to the ECB, that's definitely going to act as a headwind to the DAX as well. I mean, stronger euro will definitely not help much the DAX. Of course, on the other hand, if this is a last leg higher in a corrective move and there's more weakness, that might actually get us the turn higher that you're looking for.
Yes, but just let me show you something. Just a second. Okay, I have it here. That actually euro-dollar, okay, and DAX are in positive correlation since end of August. I don't know what this means. Actually, since earlier, you can see, look here at the top we have DAX, at the bottom we have euro-dollar, Okay, so here we have seen move to the downside, same timing here on euro dollar. On the same day, we have seen a bounce on DAX. On the same day, we have seen bounce on euro. On the same day, we have seen a top here on DAX. On the same day on euro dollar, and both are somehow trying to weakening right now. Okay, so
yeah,
I don't know actually what this means, or
I'll tell you what it means. In the short term, don't forget that we had some macro factors like Turkey and Italy mostly. So whenever we got good news for them, it's one of those times that you got a relief rally, both for the currency and of course for the index. So in my opinion, this short-term positive correlation is not surprising, given that, you know, I know the macro factors that actually played a role in that, but still, regardless, that also doesn't change the fact that if for some reason you could have good news only affecting, let's say, the DAX and not the euro, so the euro wouldn't be performing better, the DAX would have done even better. I mean, you know, even when they're positively correlated, that doesn't change the fact that, you know, you will have the exchange rate affecting the index either by helping it somewhat or hindering it somewhat. Doesn't mean that they can't move together.
Yeah, but you know, this correlation, as I'm looking at right now, is in play already since mid-May.
Yeah, it's when we had the Italian issue, mate.
Yes, okay, this makes sense. But what I like about this correlation that I see right now, if this DAX, if we respect the positive correlation, what we should do at the moment, because this is what market is actually doing, right? If DAX maybe really will find the support at the FIB levels down there, as I showed you earlier, then it can be really based on this positive for euro dollar, especially if we consider that in this latest cycle, okay, that we are seeing down on euro dollar and DAX, the euro is not so weak, and I definitely want to buy market always that is showing more strength, that is acting better. So with that being said, I'm satisfied with this actually.
Greg, I think before we call it a day, if you have another 2 minutes, we didn't talk about commodity currencies with the exception of CAD. We already have a very mature move both for the Aussie and the Kiwi. It feels to me like it's very, very late to trying to sell here. I mean, it feels to me like if you try to sell, you're going to get the market blowing up in your face. You know what I mean? So what do you think about it? What are your expectations for a rebound? And is that rebound going to be also corrective before moving lower, or you're expecting something different to happen here?
I still think that this can be a fifth wave in final stages here. Maybe even if you have different wave count, you could label this as an ending diagonal. If maybe you would move your wave 3 and wave 4 here. So this wedge and divergence at the same time on the RSI, I think are very dangerous for any new potential shorts here. So I'm thinking that corrective bounce will come, but maybe we must see some kind of bounce on gold, on metals in general that we discussed earlier. So maybe this one is tracking because silver is at the lows, Aussie is also at the lows. So maybe silver and Aussie are somehow very important to track one each other. So if we'll see bounce on silver, maybe that will be a timing when Aussie dollar will see also more upside. And of course, that's when gold, I believe, will also be trading higher then. So I still think that correction could be coming, but from a longer term perspective, any bounce will be only temporary. I see still downtrend in progress. I'm expecting a decline to resume into a fifth wave, and actually my targets are here at these FIB levels, which are around levels from that we have seen in 2008. So clearly,
I'm guessing more or less you have the same view for Aussie and Kiwi yen pairs.
Kiwi yen. You mean New Zealand dollar against the dollar?
No. I'm asking if you have the same outlook about the Aussie yen and the Kiwi yen.
Aussie yen. Okay. On Aussie yen, yes. Also, I'm seeing a potential ending diagonal forming here, and I'm expecting to bounce. But just because I labeled an ending diagonal doesn't mean it necessarily the right labeling. We still don't have any aggressive buying, right? So in ending diagonal, each leg should be made by 3 legs. This was a free wave decline. This was a free wave decline for wave 3, and now potential another free wave decline for a wave 5. So I'm waiting maybe on an impulsive reaction higher, and if we really get it, then I would maybe even try to play the long side, because I know that ending diagonals, once they are completed, they're very, very powerful patterns. And
yeah, they can explode. They can explode, yes, indeed.
So I'm just observing and waiting what will happen, but again, we have to consider what dollar yen will be doing in such case. I will just.
What about Kiwi yen? Because we have a friend asking specifically for the Kiwi yen. Do you see something different, or because to be honest, they have a little bit of a different structure. Aussie USD and Kiwi and Aussie yen.
Yeah, such an ugly price action. Really.
Yeah, it is. It is.
I mean, you see, the problem is with this trend is that it's not consistent. Okay, it moves to the downside, and the problem is that it makes very aggressive rallies each time.
Yeah.
Yes,
absolutely.
And the next problem is that these rallies are always, as you can see, very sharp, and actually somehow they are acting impulsively. Okay, so from Elliott wave perspective, I think it's very tough pair to trade. So I'm
with you there.
Yes, I'm really I'm not fan of this one, but maybe we will see sooner or later some kind of a recovery. But based on a simple technical analysis, what we should see to change a trend is to break above the previous swing high. Okay, so this one is here at 75. So only if we see a rise above it, maybe then would be interesting to see more upside ahead. But as it stands right now, as I'm looking this price action, I would just close this market and look for opportunities somewhere else, because I really don't know what I can do with it, to be honest.
I'm 100% with you. It's, I mean, you know, I've been trying to, you know, draw technical analysis on it, and it's been giving me trouble. I mean, it's definitely one of the pairs that, you know, you immediately say to yourself, okay, you know, I'll trade something else. Just, you know, leave it be.
Yes, and this is very important as a trader. You know, I also receive sometimes emails when thinking about this, why I updated that part recently and I don't update it anymore. And I just said, because I'm tracking the markets that have or are showing very interesting structures, clear patterns, which are interesting for potential new trade setup. Okay, so that's
you wouldn't force yourself to
trade the market to find something useful. If it's not useful, move to the other market. You know, you should always recognize the pattern in the first 30 seconds. If you don't see it, if you don't see a trend, then this is not clear. Then move forward. So it's not, you know, sometimes at the start when I got familiar with the FX, I actually traded only euro-dollar. But to be trading in and out euro-dollar on a daily basis is almost impossible. Okay, but if you will respect and track other markets, different asset classes, then definitely there can be different opportunities, because there are specific patterns that we have to trade, that we are trading, that have a very good risk reward trade potential setup. So actually that's are the markets where you want to put your money in, with a clear patterns, not something that is not clear. So it's very important to look across different assets and focus on clear patterns on different markets, and not be I don't know, just in love with one market, which will have very ugly patterns from time to time.
I agree 100%, mate. Thank you very much, Gregor. I think, you know, you covered most bases, if not all.
Okay, thank you. Thank you,
Have a
everyone.
wonderful day, Nate, and have a wonderful day, everybody. We'll be here as usually tomorrow. Polly will start, and 1 hour later, Face will begin. Let's hope that Dale is going to be feeling better so he can actually host the webinar. Bye-bye.
Bye-bye. Bye, everyone.